Hello, everybody, and welcome back. I'm going to do a video right now on the fourth quarter earnings season that is coming up starting. It actually started last week, but really running it full swing. January or 14th should be the first week in 2019. We're going to kick off the fourth quarter 2018. So, what do I look at when I'm you know, getting a general idea of, what to expect for an earnings season? Well, I did a video a little while ago. If you haven't seen it, go look it up, and that is how to tell market direction. And in that video, I explained to you how I use some of the data that is released from the federal and state governments to get a very good idea of what's going on. Now, if we take a look here at, we look at let's start with last week, this week here. If we look at the manufacturing, what is this telling me? Right, if I look at this manufacturing data and I say, okay, how will the fourth quarter results be? Well, I can see here this is December, November, and this is October. So this is the quarter in question, right? And it's pretty strong, like 60, 58, 50, whatever the heck that level is, 59. So all good, all strong data. So I would say that as far as manufacturing companies are concerned, the data should be okay. I wouldn't say it can be like it's not expanding, but it's not contracting. It's relatively good. Now we can see here a big, huge drop down here in January, which is really interesting. I'll talk about that in a second. But before I talk about that, let's also talk about non-manufacturing, which is the entire service industry, right? And in non-manufacturing, if we go to that data, we can see non-manufacturing. There we go. It's really strong. I mean, look at this. This last quarter was really strong. So when I'm looking at coming up with ideas for, how will this quarter be? I don't really need to look any further than all this free data that the government provides for us, right? They've been providing this information for over 30 years, I believe. It's probably using this going way, way back in a day. I can remember using this all the way back in 2000, and it's always been there. So utilize this information, right? So that being said, it can tell us what to expect this quarter. So if I'm looking at some trades for potential longs going into this quarter, and I, kind of go to my list here, and I see, let's look at some FANG names. These are basically S&P 500. I would look for things like Facebook, right? This is the service industry. And I would say, okay, great, that could potentially do well. Google could potentially do well. Netflix could potentially do well. All these names that I would look at that I would expect are going to probably have really good quarters, fourth quarter, because the data is telling me that. Now, you can look really deep into that data, and I could do a whole lesson on how to get into the data more, but that would take me literally hours, and it's something that I just recommend that you investigate on your own. It's out there. You can go to the government websites and check everything out. I mean, it's been there for decades, okay? But so generally speaking, what am I expecting this fourth quarter? Well, I expect the earnings to be good on non-manufacturing, and I expect any manufacturing companies to be okay. And it's really just that simple, right? So that in itself is wonderful, isn't it? You can use information like that, and you can get a very good idea what to expect. However, if the data is so good, then why in the world did the spider drop from 292.50 all the way down to 235? Anyone? Well, I'll tell you why. Because, you see this level right here? Smart money knew it was coming. Let me repeat that. The smart money knew this was going to be like this before it got there. So even though all this data is wonderful, right? The problem with the market these days is mega corporations, like, Bank of America, Goldman Sachs, all the big investment banks, they all spend literally millions and millions of dollars on figuring out, and they don't cheat. Everybody thinks these companies cheat and they have inside information. In some cases they do. But it's rare. Okay, it's very, very rare. Most of the time they just hire really, really smart people that are statisticians and that understand where the government collects this data from, or where this is actually the ISM, which is Institute for Supply Management. They figure out what they do and they duplicate it before they do it, right? And you're always going to be one step behind, right? You're always going to be one step behind. And that is just a fact of life you have to deal with when you're a retail trader. You're always going to be one step behind. But that is where order flow comes in. Because if you were a student of order flow, the way I learned it when I was a floor trader, I can basically see what smart money is doing in price. Now, it's different than technical analysis, because order flow, the way the floor traders, or the way I specifically developed it, tells me exactly what to look for. And I'm not talking about patterns or technical indicators. I'm talking about my proprietary way that I spent literally 3 decades refining, learning how to gauge what price is doing, because the smart money can hide everything but price, right? They might know what the data is before the data gets there because they're smart and intelligent, but they can't hide what they're doing in price, because price is basically going to give me the context, okay? And that's one thing I want you to just kind of understand here. Let me just clear this out. Context is king. I was doing a little video for some other people. I'm just going to redo it right now. So context is king, and that's one thing you want to understand. So when you understand that the order flow is going to give you the context, you put it together and pair it up with the data. Now you have something that you can look at. So this is kind of where we are right now. We're testing this important level on the S&P. So if the data, if the earnings are really good this season, this should happen. The market should be strong, get above this level. This is a really important level right here. These are my 2 important levels right now, 260 and 233. If the market is really strong, we should get above that level and we should stick and maybe even do something like this. And in which case we will be going to a more extended bear market, because I do think a bear market is coming. However, if the data is actually not as good as the expectations and we don't get above that level, then we're going to do something like that. Okay? So now I've got a game plan, right? And I keep, that's why I keep telling you guys, indicators, technical analysis, fundamental analysis just by itself, it isn't going to help you. You must understand the market has so many moving parts. There's geopolitical situations. What if Trump were to get impeached? Do you not think that the market would start to have a sell-off on that, right? Of course it would, because markets don't like instability, right? What if the another war breaks out? There's so many moving parts that are going on inside of what makes price happen. It's not just the smart money having an idea of the fundamentals, but you can't hide things in price. So when you understand the fundamentals, when you understand the order flow, when you understand what the expectations are, when you understand all the data, when you put it all together, you come up with a context. And it's a story. And that story is what takes years to get good at defining. And the best thing that you can do is come up with situations, right? I was watching this video the other day on Stevie Cohen, and particularly his mind coach, or the people he uses to, to train the people at SAC Capital. And they were asked that the coach for Stevie Cohen's company, what's the number one trait that a trader has to have in order to be a very good trader? And his answer was an open mind, right? Because there's so many potential scenarios that could happen, and all we can do is adapt and see what's going on. Will this happen? Will this happen? Maybe this will happen. We'll make new highs. That could happen as well too, right? I mean, that could easily happen. So there's possible scenarios. So as a trader, my job is to come up with the context of the situation. And I don't think a lot of retail traders really understand. That is what trading is all about. You build an idea around the information that you have, make sure you get the best information that you can possibly get, then build a context that could happen, and then you trade off of it and you adapt. And that's really why I've been around for 40 years, guys. Right? I mean, I've been around for 40 years because I've been able to do this. Haven't always done it well. And sometimes I suck at it, and sometimes I'm really good at it. And other times I'm perfect at it. The more I do it, the better I get at it. And the better I get at it, the more money I make. Right? And that's the one thing I can't ever give students. I can teach people the pieces of the puzzle. I can show you what to look for. But it takes experience putting it all together. But the one thing that I do teach that is really super important that I think I do over more than anybody else. Everybody else is telling you, do this and you'll make money. And I'm telling you, don't do anything except for come up with ideas of potential situations. And the one thing I do, very, very different than everybody else, is I teach objectivity. Because if somebody tells you they know what the future is, they're full of crap, right? I mean, all we can do is come up with the context and remain objective about potential outcomes. This is what I think will happen. What's the probability that I assign to that? Well, I might assign a 60% probability to that. What's the probability of this happening here? Well, I might assign a 40% probability to that. And then what's the probability of this happening up here? I might assign a 10% probability to that. But, does that mean that that's not going to happen? No, right? I mean, we never work in black and whites. We always work in context. And that is what makes a great trader. Objectivity, open-mindedness, having a plan, putting the information together, and then executing on that plan as best we can and adapting, right? So I kind of laugh whenever I go into stock twits, because all these guys that are in here telling you this is what's going to happen, right? And, there's all these arguments and fights, right? And, people fight with me all the time in here, but they don't understand. Dude, this is just what I think is going to happen. Doesn't mean that it's going to happen. It means it's what's most likely that I believe the information I see is going to happen. But I really don't care, right? I really do not care, right? Because I've built a scenario up in my mind, and I've managed my risk management to plan for this, to plan for this, and to plan for that. So either one of these three situations can occur, and I'm still going to be fine because I've managed my trades around context. Does that make sense? Right? And occasionally, there's no-brainers, as Carl Icahn would say. Right? Carl Icahn, he's the type of guy, he says, there's no-brainers out there. But even those no-brainers are going to be like 90%. Nothing is ever going to be 100%. There's always something that could happen. But what you do is you make your plan, you build your plan around the context, and you adjust your risk management to your ideas, right? So when I do find no-brainers, for example, If we look at some of my open trades right now, I think this one here, I think either JD, which I am short puts, right, and Knights, which I am short. I think these are no-brainers, right? But I'm basing that based on order flow, and I'm also basing that based on the fact that I do not think that something as complicated as a U.S.-China trade deal can happen in a weekend. I think that's something that's going to take years for it to work itself out. And I know the Chinese, they really don't give a damn about working anything out right now. You know, they have 1.9, almost 2 trillion people versus the United States, which has 350 million people. They really don't care, right? They're growing at 4 or 5%. The U.S. is growing at 2.5%, if they're lucky, 3%. They don't care. They're not dependent upon a deal with the United States, so I don't think that's going to happen, right? So that's just my personal opinion, but this is a no-brainer. So on trades like these, I'm going to take bigger size. Okay, so just to recap quickly, based on the data, we should see a good quarter, especially good quarter for non-manufacturing. If you want to find out about non-manufacturing, just head on over to their website. It's all over there. Let's see, Forex Trader. Head on over. You can research the heck out of all this. It's all free information, guys. This stuff has been around for 30 years, and it's right there, right? Okay, and where is it? I think it's up here. Just go to the ISM website. You can get as much information as you want. All right. Here's the latest release at Institute for Supply Management. It's all there. It's been there for decades, right? And do some research. Learn about it. Okay? All right, guys. Thank you for watching, and bye for now.